All right, let's talk about Mercado Libre. They just dropped their latest earnings report, and honestly, it's created a really fascinating puzzle. You've got this absolute giant of Latin American e-commerce and fintech posting some just monster numbers. But the market? The market's reaction was, let's just say, not what anyone expected. So let's just jump right into the middle of it. Mercado Libre announces these incredible results, right? The kind of results that you'd think would send a stock absolutely soaring. But nope. Instead, the stock actually took a hit in after-hours trading. It's this classic paradox that really gets investors talking. You know, when stellar performance meets a super skeptical market, what is going on? And yeah, that really brings us to the main question we're going to tackle here. If the growth is that explosive, what in the world is spooking Wall Street? So let's break down both sides of the story, and we're going to start with all the good news, which, trust me, is pretty overwhelming. Okay, first up, the bull case. And I gotta tell you, the numbers here are they're staggering. This is the part of the story that makes that stock drop feel so confusing when you first look at it. So the big headline number, 39%. That's a 39% jump in net revenue compared to the same time last year. I mean, to put it simply, this company is growing at a truly breathtaking pace. They're pulling in more money than ever. And look, this isn't just a good quarter. This is a statement. But you know what's really wild here? It's the consistency. This isn't some one-time fluke. The shareholder letter points out, get this, 27 straight quarters of growing more than 30%. That's almost 7 years. I mean, that kind of sustained performance is just incredibly rare, and it really shows you the powerful momentum they've managed to build. And look, this growth isn't just some abstract number on a spreadsheet. It's being driven by actual people. I mean, just look at the scale of this thing. 77 million unique buyers, 635 million items sold in a single quarter. Think about that. This isn't just an online store anymore. It's a massive, thriving digital economy. Now, a huge piece of this success story comes from a really smart bet they made down in Brazil. Check this out. They aggressively lowered the bar for free shipping. And the result? Boom. A massive acceleration in items sold, the biggest flood of new buyers they've ever seen in a quarter, and conversion rates that hit an all-time high. It's like a perfect example of how one strategic investment can kickstart this powerful growth flywheel. Okay, so the growth story is just undeniable, right? But like the slide says, that dominance comes at a price. So now we've got to flip the coin and look at the bear case. This is what's got investors worried. It's not about the growth itself, but what it's costing the company to get there. So yeah, if the growth is so strong, what's the catch? That's the question every analyst is asking. And the answer, like it so often is in business, really just boils down to one simple word: profitability. Is Mercado Libre paying way too much for its market dominance? And right here, this is kind of the smoking gun for the bears. Even with all that record revenue pouring in, the company's operating margin, which is basically the profit they make from their main business, it actually went down. Yeah, from 10.5% to 9.8%. The best way to think about it is like this. Imagine you get a huge raise at work, but at the same time, your rent and your grocery bills go up by even more. You're making more money, but you actually have less cash left over. That's what's happening here. They're keeping less of each dollar as profit. So, okay, the big question is why? Why is that margin getting squeezed? Well, a few big things are going on. First, that amazing growth in Brazil, that wasn't free. It was fueled by spending a ton on that free shipping offer. They've also been pumping more money into marketing, trying to get younger users on board. Then, you've got their credit business, which is growing like crazy, but that means they have to set aside more cash in case people can't pay back their loans. And finally, you've got macro headwinds in Argentina, which are just making everything more expensive there. Every single one of these things takes a bite out of their profits. In this chart, wow, this really puts one of those big headwinds into perspective. Argentina is a super important market for them, but just look at this sharp slowdown in growth. I mean, it goes from a mind-boggling 218% growth all the way down to 44% in just a few quarters. That macroeconomic instability isn't just some abstract concept. It's a very real risk, and it's hitting them right where it hurts. So here we are. We've got two very different, but you could argue equally valid stories. You've got the explosive growth story on one side and this story of rising costs and pressure on profits on the other. Let's put them right next to each other and see how they stack up. And this table just lays out the whole conflict perfectly. You see on the left, the bull case is all about the long-term game. It's about investing now to absolutely dominate the market later, to keep that growth flywheel spinning faster and faster. But then on the right, the bear case is all about the here and now. It's pointing to the margin pressure, the intense spending, and those very real macro risks. It really is that classic battle between long-term vision and short-term results. So, what does Mercado Libre's management have to say about all this? Well, from their perspective, this isn't some problem they've stumbled into. No, this is the plan. They tell you this is a very deliberate, strategic choice they're making to put the long-term way ahead of any short-term gains. And this idea is really the core of it all. It's the classic playbook for any big tech growth company, right? You spend aggressively now to build a moat around your business, to capture a massive market, with the belief that huge profits will follow later on. It's a simple trade-off, really. A little bit of pain today for what you hope is total dominance tomorrow. I mean, you really couldn't ask for a clearer statement than this. This is a direct quote from their earnings call. Management is basically telling Wall Street point blank, look, we are not managing this business for short-term margins. They're saying they see this massive opportunity out there, and they are not going to hesitate to invest, even if it means taking a hit on profits right now to go after it. And so, that leaves us with the ultimate question, doesn't it? Is Mercado Libre wisely sacrificing today's profits for what could be total dominance tomorrow? Or are these rising costs and shrinking margins a real warning sign of trouble ahead? Where you land on that question? Well, that's what's driving this whole debate around Mercado Libre's stock right now.